Welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. Secondary sales typically occur with later stage startups. Investors who want shares in a company will buy the shares from founders, employees, or other investors. Price is typically at a discount to the last price round, such as 15 to 30%. And the seller must find a buyer for the stock. This could be existing investors in the company who want a larger position or new investors. Oftentimes, investors who could not get into the investment round will buy shares through the secondary market. The company itself may know of potential buyers of the stock, and there are websites that match investors to sellers of the stock as well. And there are venture funds that focus on buying secondary shares. Investors use SPV or special purpose vehicles to structure the purchase. The purchased stock has a lockup period and cannot be sold for a period of time. Those who sell the stock will need to take taxes into account. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start listening to today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.